Welcome back, everybody. Welcome back. It's about that time of day again. 7:30 a.m. Monday through Friday, we're going from screen to floor with your crude oil morning prep. My name is Joseph James. I'm here from School of Trade. I'm going to provide you with a technical approach to looking at crude oil this morning. I'll be working with a top-down approach, meaning I'll be starting with dailies and weekly charts, and I'll be moving all the way down. I'll be moving all the way down to a 5-minute chart so I can analyze London, I can analyze the overnight session, and we're going to anticipate direction and high percentage trades starting at 8 a.m. Eastern Time. Once I'm done looking at my charts and anticipating those high percentage trades at 8 a.m., we're then going to move all the way across the country. I'm in Los Angeles. I'm going to go all the way across the country to the NYMEX exchange in New York City, and we're going to listen in to hear what Marty Errico from Traders Audio is seeing on the trading floor. Now, us screen traders, I'm a screen trader, all of us screen traders out there, we love the input that Marty gives us because it gives us a very unique way of looking at it. I'm going to look at my charts first, and then Marty's going to see if he can poke some holes in what I'm seeing on my charts, and we'll see how we can use those to benefit ourselves today. Without any further delay, let's get started. Let's jump right into a couple anchor charts here on crude oil. Now, I'm going to use the term anchor chart to describe a slower time frame chart. An anchor chart would be where we begin our morning analysis. And of course, an anchor chart, please remember, if you're an intraday trader, if you're taking trades throughout the day, not holding trades overnight, right? If you're day-only trading, these dailies and weekly charts are going to be, well, they're not going to tell you where to trade today. They're going to tell you what's happened so far. So I'm looking at this daily chart, and the first thing I see is we got the price wedge. We're trading in the middle of the price wedge, which tells me I can go either direction today. Being in the middle of the price wedge tells me I don't have any easy bias. If I was at the highs of the wedge, I would say, well, we know the short side would definitely be a side to be patient for, right? I'll shy away from the buys. I'll be aggressive on the sells. But we don't have that luxury this morning, right? We're not down in support. We can't say, well, we know that we should be buying here today because that will be the easiest direction. We don't have that luxury. Now, don't get me wrong, two-sided trading is just as easy as trend following trading, but you've got to be aware of it. If you're trying to trend trade a sideways range, you're going to be hurting. So we identify right away here on the daily chart. We're right in the middle. You can see we are directly smack dab between the 95.25 sell zone and the 91.97, we'll call that 92 even, buy zone below us. So we know we can go either direction this morning. Daily chart doesn't give us that much information. Daily chart doesn't give us that much information. I'll be right there with you, Steve. Good morning to you, my friend. From the daily chart, I'm going to go down to the 4-hour. Now, the 4-hour, boy, this new indicator we've been working on, you'll know a big development project here in this office finally coming together. You can see it on this chart here. Our students will be receiving this probably by the early next week here. We'll have this thing licensed out to our students. Bottom line here, what are we seeing on the 4-hour chart? The 4-hour chart's a great kind of meeting point. It's a halfway point between a daily chart and an hourly chart. What do we see? We get a price wedge. We have higher lows. We have lower highs. Now, you can call it a wedge. You can call it a triangle. You can call it a pennant or a flag. I don't care what we call it, guys. We know this price wedge or this triangle or this flag or this pennant tells us to expect fake out breakouts. I'm now expecting that price will attempt to break out and at some point will fail and come back down in. That's the majority of the time. Sometimes I'm wrong. Sometimes this personality is too strong and it starts a new trend. Oftentimes what happens is we will trend and then consolidate, then we'll trend and then consolidate. So what you'll end up seeing on a chart, get a little illustration tool here, what you'll end up seeing in a chart is you'll see trending markets. Just look at the E-minis right now. Trending markets to new higher highs. Then, of course, we try to back off. We start to wedge. The wedge gets narrower. By the time another form of stimulus shows up, as soon as another outside influence creates a concern or a demand, prices will then break out and trend again, either up or down. So we know this is a very common and predictable environment we see on these markets that we trade. And this is not just crude oil futures, guys. This is anything you can see with liquidity. So we know we have a price wedge right now. We definitely can see a bearish tone to this long term, right? We can probably throw in a little bit of a bear channel in here. right? So we do have a bearish tone to it. So we know that selling at the highs right now will be the higher percentage trades. We know that we've got lots of resistance overhead. And as we always say in our live trade room, make it easy on yourself. If we're looking into resistance here, don't try to take the buys. Wait for the sells. Wait for the reversal. Wait for the price to go up, slip, and then fall and tumble back down in. Right? At the end of the day, we don't need to reinvent the wheel. All we have to do is get into a few high percentage trades. And we can see the top of this wedge, the trend line gives it away, the reversal zone overhead, and remember that level on the daily chart, 95.25? 95.25 is right about here. So we have some major daily resistance up around that 95.25. If we happen to jump up, right, I will, again, as always, once price rises, I will be looking for a reversal to bring it right back down in. So as I look at this resistance overhead, I immediately think if I'm going to look to buy, I better be careful. And the second thing is it's going to be a lot easier for me to sell short today than it will be for me to get long. Keep that in mind. Let's keep going. 4-hour chart in the books, 60-minute chart. Here's the hourly anchor, and the hourly anchor just blows the previous two charts completely out of the water. What bearish trend? What price wedge? I don't see that on this chart. Boy, it's amazing how we get just a completely different look from one chart to the next. This is why it's so important that we have multiple time frames as part of our analysis. Okay, one of the aspects of a healthy trading career is multiple time frames. We want to see the big picture. This chart now tells me, whoa, bull channel, higher highs, higher lows. We can easily see with a bull channel, the highest percentage trades are going to occur around 93.88, 93.68. I'll be looking for buying opportunities using this channel anywhere between 93.41 and 93.80, right? 93.88. There's a huge opportunity here to see price bury into the buy zone here and then keep on going. So what does this tell me though? We already know that trying to buy is going to be difficult. The 4-hour chart told us that with higher highs here, we're better off waiting to sell those highs. But now we know we've got a profit target for the shorts, 93.88, got a profit target for the shorts, and we also have a place to look to buy. So I'm going to be looking for short-term buying opportunities this morning, back up the truck, short-term selling opportunities this morning, scratch that JJ, it's still early here in Los Angeles, and of course long-term buying opportunities. Short-term selling, long-term buying opportunities. Now, with that said, there is one asterisk to those buying. Be careful of buying into this symmetry sell zone. All right, if we connect the dots here, if we connect these dots here, guys, going up, we can see we have some symmetry on the way up. So just remember, bull channel tells me that buying at these lows will be the higher percentage trade this morning. However, there is a point where I need to start being concerned about buying. Ideally, what would happen is I would avoid buying directly into that symmetry sell zone, wait for price to break through it, then I'm buying pullbacks as early as 95.22. 95.22, that reminds me, 95.25 was that daily chart level, so we have a very difficult time here buying above this 94.85. 94.85 because we got that 95.25. That was the daily chart level. So again, we're looking at the only real easy trade here to get long will be to use this trend line, use this channel low. That's going to be the only time when I'm going to feel comfortable today getting long here in the long term, right? I will have higher risk trading. Even if I'm buying the lows of this channel, it will be higher risk if I'm buying directly into 94.84. Buying directly into 95.25, so be aware of those, right? Be aware of those. This hourly chart completely shakes things up, and it tells me I've got a bullish trend, and I've got to deal with that bullish trend now. If I'm selling short, I got to take profit at this support at the lows of the channel, and I will be looking to buy the lows of this channel as the day progresses. 93.88, 93.88. Remember that number, folks, because now we're going to move over to a 5-minute chart. The 5-minute chart is definitely one of my secret weapons. 5-minute charts, 3-minute charts, they're all pretty much the same. I like a 5-minute chart. A 5-minute chart is nice because it prevents me from overreacting. It prevents me from, right, a minute chart, a 2-minute chart, an 89 tick chart. A really fast time frame is always going to be, something's always going to be firing off in my mind. And as a new trader, ignorance is bliss. Trust me on this. What we don't know can't hurt us for the most part, because at the end of the day, we're trading patterns, and these patterns have specific, winning percentages, and we'd rather not be spooked by knowing too much. On the 5-minute chart, what do we see here? 93.88. Where was that 93.88? Here it is right here. So it's conveniently located right around the lows of the London trading range. Very, very convenient. Now, on the 5-minute chart, I've located all the reversal levels here. If you were watching yesterday, you saw how all 3 of those reversal levels gave you great short selling opportunities. I know, Steve. I'll be right there with you, Steve. Just give me a few seconds to finish up. On the way up, we have reversal zones above us. On the way up, I'll be looking for a reversal out of the reversal zone number 1. On the way up, I'll be looking for a reversal at 94.75. Right? On the way up, I'll be looking for a reversal at 94.96. I've got a level up top here as well at 95.31. All right? On the way up here, I've got 94.55, 94.78, 94.96, and 95.31. Those are my hot spots here this morning. And remember, it's going to be challenging trying to buy your way up to it. I'd rather wait here, let some other poor fool try to predict the breakout. I'll wait for the price to collapse, and I'll sell it short. I will use Fibonacci for profit targets. I will use trend lines for profit targets on the way back down. As we move lower, I have immediate support starting out. Here at 94.09. 94.09 and 94.02. That is immediate support here, and that is based on, actually I can adjust that now. That will be a little bit higher here. We'll assume 94.15. 94.15, that will get adjusted higher. We just made a new higher high here while I was talking. 94.15 will be the short-term support. I am going to have profit targets for my shorts at this trend line. I also must be aware that we have a huge buy zone here. This is actually a double buy zone. The 93.95 to 93.82 is a daily reversal zone, and then we have the London reversal zone here around 93.66. So I have levels here starting at 93.95, 93.82. I've got 93.66. This is my big buy zone here below me. And isn't that amazing how it lines up? Remember 93.88? 93.88, that was my level that we just talked about on that hourly chart. If we happen to blow right through it, I have another great buy zone down here at 93.50. I will be looking for a buy out of that buy zone. Okay? Because after all, what's going to happen is if price enters into this buy zone, I'm not going to guess and just buy. I'm going to wait for the reversal and then buy it once I know it's reversing. If it just proves me wrong and blows right through it, that's perfectly fine. I'm not going to be run over by a freight train. I'm going to wait now for the next buy zone to be tested, wait for it to show me the reversal, and then buy pullbacks and trade right along with it back up, right? We're not trying to predict. We're trying to react. So be aware of levels above me. Be aware of levels below me. These charts are already posted today on our blog at Sideways Markets. And that's all I got for you here this morning on the charts. Let's listen to what Marty's got to say, though, because I'm thinking short-term selling, long-term buying. We've got some range-bound markets on this 5-minute chart. Marty, what are you seeing out there, my friend? Am I completely off my rocker this morning here in Los Angeles? What's happening out there in New York City?
No, I think you're right on. I think you're right on. Listen, I've been looking at this all night, and I've been, you notice the first thing you do when you look at one of these charts, like a 5-minute time frame, a 13-range chart, really whatever type of time frame you're looking at, you can see we're in a sideways range. It's so clear. I mean, if you can't see it, I don't know what to tell you. It's so clear that we're in a little bit of a range. You can see the high of it's 94.5, and the low of it here recently is going to be 93.40, right? So this is the range that we're in. And what do we do? What do we have to do when we're in the range? Well, you obviously sell the high and you buy the low. So we had a perfect opportunity yesterday to break above that 95.25, right? Perfect opportunity. Instead, we saw everybody get flat. Everybody in the pit, all our locals, the big paper that's been holding for the last couple of days, they all get flat, right, into the close, and that's why we saw that downtick into the close. And that happened even yesterday too. Tuesday as well. So after Tuesday and Wednesday, everybody gets flat. They go home flat. They're doing it for a good reason. They're doing it because we have unemployment figures on Friday, big number. Today, jobless claims. That may even move the market a little bit. So today at 8:30, when we see jobless claims, you know, that might give us a good cause to break out and trade above that 94.50. But the thing is, you have to get conviction. You have to get followed through. I'm looking at the dollar this morning. The dollar's trading a bit lower, as you can see, at 82.45.5. Our other multiple market divergence, if you look at the RBOB, you look at the heating oil, they're kind of just drifting off their high prints, but not making those new higher highs that we need. They're making lower highs. They're starting to wedge out just a bit. If you look at your RBOB and heating oil, they're both coming in. Another noticeable thing is volatility is coming in as well. Volatility is trading at about 22% right now. So volatility is coming in, right? That could be that could give us an indication that we can stay up near high prints and then turn around and sell these highs. As basically it's working out right now. I got 20s trading right now. So again, this is a good trade to take before the opening bell. Also this morning, I'm looking over at what's happening here in our Brent market, and remember Brent was all the way up at 104 yesterday, right? That was the high that it made, and now we're down at 103.10. So you can see Brent faded off those highs by almost a full dollar, and we're trading at 103.10. The Brent WTI spread hovering around $9. Again, it's 8.85 right now. That's a little tight this morning. As you can see, we did catch a bit of a bid in the morning. That's why that spread's tight. But when it starts to backwardate, you can see confirmation of a nice sell the high type of trade here into jobless claims. But at 8:30, I would want to be flat and watch what happens here for the claims. Of course, is always the case. I'm also looking at your spreads right now, your supply-demand differentials. The spreads are telling me screaming sell at the moment here at the high of this range. I'm looking at your July to August spread right now. It's just about 20 cents. July to SEP is 22 cents, and then July to OC is just about negative 0.5 cents. So again, they're in backwardation pretty significantly by about 6 or 7 cents. So this is all telling us that we have a pretty nice selling opportunity of playing the range, basically. Sell the high and buy the low. So I'm right on what JJ's saying here. I agree with him. The charts and the technicals and the pit fundamental of everything couldn't tell me more. Guys, let's just look at some levels and some options. Again, in the pit yesterday, we saw strike levels trade on the call side. We saw the 94.5 and 95 call trade. Again, the 94.5 and the 95 even call, 2,200 times in July and also in August. So they're interested. Again, they put 2,200, right? You can think they're interested. Well, on the put side, they buy 5,090 puts and 5,088 puts. And then in the pit, the trade of the day yesterday in the pit was the 93 to 94 straddle. So keep in mind that 93 to 94 straddle simply just means they're playing the market 93 to 94 half. Boom. You know, they're just playing that range. So today when we come in at 9 o'clock in the morning, we're going to see what kind of big orders they're putting in. And if they're straddle orders again, they're going to be playing this range. We're not going to go anywhere. But, you know, we've been in this range now for 4 days. And I think we have a decent opportunity to at least break out of it. So we know what the range is. It's 93 half to 94 half. Break above 94 half, you know, we can get some buying opportunities up to 94 and a quarter. And if we break below 93 half, we have some nice selling opportunities to get down as where JJ's targets were down in the mid-92s to 92 even. So let me just get my levels up here, guys, and let's rock and roll. All right, guys, so levels for June 6th. Yesterday's pit session high was 94.48, where it says PH. Again, pit session high from yesterday, 94.48. Your low, 93.58. We end up closing and settling the day at 93.76, kind of in the middle of our range. Today, your daily pivot is 93.94, so you can see right in the middle there, 93.34. 93.94, sorry. All right, guys, resistance above what I got for you here is 94.30, 94.84, and 95.74. Some support down below, I got 93.40, 93.04, and 92.14. So again, very near-term levels of support and resistance. You can see, guys, implied volatility up to 24%. The front vol is 22%. OVX 2450. We look at open interest this morning, and we see that it currently stands right now at 285,093. And guys, that open interest here is showing us that we're a little bearish again, because we've been trading in the 260s for open interest. So a little bit of an increase in open interest, telling us some shorts are in the market up at these highs. So that was increased from yesterday's little selling frenzy at the end of the day that we had here in the pit. Guys, net change from yesterday, nothing here. Negative 36 cents. It was a very, very, very low day. And keep in mind, guys, we had a 90-cent trading range altogether. 90-cent trading range. Come on. It's nothing. Guys, those large strike levels I was mentioning, those 94 halves and those 95 evens, those were on the call side about 2,000 times, 2,200 each in July and August. And then that 95, that 91 half to 90 strike price, those are puts, guys, and those were traded over 5,000 times each in the pit for July and August. As I mentioned, ladies and gentlemen, we did see a lot of straddle buying in the pit, 93 half to 94, 93 half to 94, so you can tell we're trading in the range. We'll have to see what happens after these numbers. But again, you guys do have a game plan of attack and play. Real quickly, natural gas, let's rock and roll here, guys. High yesterday in the natural gas, 401.80. Low, 397 half. We end up closing and settling the day at 4.03. Daily pivot today, 3,999. So 399.90, 399.90 is going to be your daily pivot today. Resistance above, ladies and gentlemen, 402.30, 404.20, and 408 half. Those are very good levels of resistance above that we can use if we do get a draw on inventories. Support down below, 398 even, 395.60, and 390 even. Another great level of support. So again, if we get a build, we're looking for 101 BCF in the natural gas today, 101 BCF. Anything above 101 will be selling down to those levels of 398, 395, and 390. If we come up above 101 again, that's what we're going to move. We'll be selling. If we come below 101 BCF, we're going to be buying, and we'll be buying up to that 410 to 408 half. And it's really that simple, guys, in natural gas. As you can see, if you pull up a natural gas chart, I mean, wow, look at a little bit of a tight range that it's been, and now just look how it's just consolidating. Now, consolidation isn't bad. Consolidation is good. It's evidence of a breakout. That's what we need to see. But, I mean, look at the range, and now look how it's just consolidated here, like so tight that range is now. So you can see, you know, consolidation is good. It's evidence of a breakout, and we're going to be expecting a break of that range here today after inventory numbers hit the board. So, again, guys, that's it for me today. I'll be seeing you later on in just about 49 minutes exactly here, guys. I'm the first one on the trading floor here, waiting for the gold pit session open and for these numbers to hit the board. I'm ready for you guys. I'm already here, so I'll see you guys in about 49 minutes again for the broadcast. Again, I'll see you guys. Have a wonderful Thursday, and I'll see you all later. Again, I'll see you guys in about 49 minutes.
Boy, thanks, Marty. As always, great stuff. Guys, I got all the charts posted for you for today. Everything's ready to rock and roll. All you got to do now is get those levels on your charts. Let's delete this. Hold on, sorry guys. There we go. Sorry about that. All we got to do is make sure that you're prepared using those charts this morning. Take Marty's levels and use them. I'll make sure they're all up there for you guys on the blog as soon as possible here shortly after we're on the call. Thanks so much, guys, for coming out and watching today. My name is Joseph James. I'm from schooloftrade.com. That was Marty Errico with Traders Audio. I run a live trade room every morning starting at 8 a.m. Eastern Time. I'd love to have you guys come out and join us there. And Marty and his partner Jeffrey at Traders Audio, they have a great broadcast starting at 8:50 a.m. Eastern Time with Traders Audio directly from the NYMEX exchange. We find a lot of value. In Marty's broadcast in our trade room, and we hope you guys do too. As always, thank you so much for coming out and watching and listening today. Good luck out there. Don't forget the levels we mentioned this morning. Always send us your feedback. We love your feedback. Please feel free to send us feedback, whatever you'd like to see added or whatever you like or don't like about the broadcast. We always want to get better at it for you and make it a more productive call for you guys. Keep in touch. We'll see you guys in 23 hours and 30 minutes. We're back here for a finally Friday edition of the Crude Oil Morning Prep. Adios, amigos. Bye-bye for now.